This article is coming from Yahoo Finance by way of Bloomberg. EV charging stocks sink after General Motors says it will use Tesla's charging network. So GM moves to adapt its EVs to use Tesla's network of superchargers have sent shares reeling for other makers of EV charging stations. We have Evgo. They sank 12% Friday, its worst day in nearly a month. Chargepoint Holdings shed 13%, and Blink Charging fell 11% for its largest daily loss since February. We also had this company I never heard of, Beam Global, which designs clean energy systems for EV charging. They also fell 5%. Now, GM is the second major automaker to say it will use Tesla's charging network. Ford Motor made the announcement in late May. While the pack is weighing heavily on other EV charging companies, the market may be overreacting, according to some on Wall Street. They say they think the news is overblown, though we would acknowledge that the news does put into question what GM's long-term plan is for Evgo, which has been one of its key charging partners. JP Morgan continues to see overweight ratings for ChargePoint as well positioned to benefit in areas where Tesla doesn't compete. They are less clear on Evgo direction in the long term, but says the company continues to have significant partners with other EV makers, including Toyota and Subaru. Bank of America agrees that the news is more uncertain for Evgo, for which it has an underperforming rating, even though GM identifies an ongoing commitment to its Extend business. Bank of America states and analysts, we expect investors will be uneasy about the competition and is now another major partner. Evgo will now compete more directly for utilization against Tesla, highly reliable network serving a larger piece of the future EV fleet. That's not an issue for hardware provider ChargeGo, as its network is largely fleet-based, according to Bank of America, which reiterated its buy rating on the company. All right, so let's focus on Evgo and ChargePoint. We're first going to look at ChargePoint's chart. This is the monthly chart, and it's pretty dismal, right? We can see that on the monthly chart, price has been making lower lows. If we go to the weekly chart, we can see a sell area at $10.50. Not sure why I had this little white box here. Maybe showing that price was hitting this orange simple moving average, and that was serving as a dynamic resistance level. But again, you can see that prices have been making lower lows in a bit more detail. All right, let's go to the daily chart. Okay, so I guess that was a level where there were sellers as well at the 975. Again, price was butting its head against the 100 simple moving average, again serving as a dynamic resistance level. So this was a strong level to short, right? Not only did we see the moving average serving as a confluence on the daily, but we also saw that on the weekly chart as well. Going back to the daily chart, I am anticipating price, which did gap down on the news and close red for the day, to make a lower low. I like the round hole psychological number of $7. Let's see how far price will go down. When it comes to Evgo, we're going to start with the monthly chart, and it's in a nice downwardly lower highs, lower lows channel. We can see this probably a little better on the weekly chart. So if I draw I don't want to say zero becomes the target, but that's kind of where we're at right now. Now, the question is, can this level hold? And I'm going to say no, this level is not going to hold, because although this was the origin of the move higher, it stalled out at $8. If we saw price move higher and take out this pivot high, then I would say this will be a good area for price to at least pause and serve as a floor. So what I'm expecting from Evgo is now we have to go out into the future. So let's see. I mean, zero's right there. I know it's pretty ugly, but what you would hope for essentially is some type of bottoming pattern to occur, eventually breaking out of this downward channel. Let's do this a little better. Essentially what I'm looking for is some type of W pattern. Let's make this orange. Some type of bottom pattern to give you confluence and confirmation that price is going to go higher. At the moment, and this is zero, let's mark the zero line in. All right, so we need to be above, right? This is what we're looking at. And this is 2025. Okay. So let's make this a bit more realistic. Once you can get a close above the downward channel, that will be confirmation that price is on the verge of breaking out. However, you want to see at least price retest that bottom channel. It may penetrate it, but then that will be the formation of the W pattern forming, and then a break above the apex after the double bottom will be an indication to go long. So Chargepoint and Evgo, look for prices to continue to decline as the fundamentals and the technicals support more forward downside risk. Thanks for watching. Subscribe, please. Like the video.